Hello, trading is closed on July 19th, 2019. We'll go over our calls, and I'd like to answer a few questions that I got in my email. You'll recall we said the commonest thing was a gap outside of yesterday's range. We had a target, and this should print at some time, but when we gap in the other direction, I'm no longer predicting it prints the same day. I'm also not predicting it wouldn't print the same day, and that one printed, so we don't have to add it to the list. We still have these targets that should print at some time. Doesn't mean you won't drop first, and this futures high should have its cash equivalent print at some time. So no matter how bleak things look, I don't think this bull market's over. During the day, MEJT gave a sell signal here. We started to drop, went up too high. MEJT said it was false, and then the bottom dropped out. Well, this reviews our calls. We said Friday's pattern had the early low, but we could gap up first. We had this target, which printed, and the commonest thing was a gap and a quick move outside the range. Now, you can make the wave count say whatever you want to say at this point in the pattern, but this is a perfectly valid pattern with an ABC with perfect fib ratios, and if we do go up Monday, this is a perfectly valid explanation for the first ABC being completed. Something else happens, you can make something else work too. Monday's pattern has the early low. Usually it's a rally day with a late high. If it's negative, there's typically a big drop in the first hour or two. Bears need to follow through because almost always a straight line drop on Friday gets followed through Monday. If it doesn't, and particularly if we gap up, which isn't impossible with this wall into the close, if we gap up, we can have a strong rally. Now, in addition to that wave count, the arrows show today's high exceeded this high of the prior consolidation. And almost always when that happens, it's a sign that new highs are going to print. Note that although the highs of this prior consolidation didn't hold, the lows of these prior consolidations here have held. The put-call ratios at extreme levels over its upper Bollinger Band, everybody's negative. I think we are near a top here. Maybe that was it, but gapping up Monday should delay its onset. If instead we drop with conviction under recent lows, I think that most likely is the end of this move. But there's a lot too much pessimism for me to be confident of that at this time. Monday's early trade should tell us what's going on. Be particularly cautious if we're down all through the overnight session and then recover it and actually go positive early Monday. That would trap everybody down here in the basement and could lead to a good rally. The open is going to tell us. Important thing to remember is the pattern with the early low. Well, let's answer a few questions. We normally do things a bit differently on the weekend. And instead of talking about the general pattern, we'll answer a few questions. If you don't send me a question at this address, I may never see it. I have other addresses, but for some reason, when something from my channel gets sent to me at the other address, a lot of it goes into the spam, and I'm not going to go through my spam to find those questions. That's why it goes in the spam folder in the first place. A few people asked me if this is before the market opened, if today's gap up implies the unsatisfied higher targets we met today. It doesn't say one way or the other is the answer to that. People ask me which books other than mine can one read to learn more about the market. It's like asking a Republican who other than President Trump would you like to see would you like to see win next year's presidential election. But that being said, let's give some opinions. In my opinion, most books and most gurus aren't worth very much. There's a guy who has videos on YouTube, Dean Handley. He's reviewed 1,508 stock advisory services and channels. He found 10 out of 1,508, which are truthful, transparent, and profitable. Mark Culbert reviews advisory services, and the best one he's found is wrong 30% of the time, and some very famous people are wrong most of the time. A few years ago, there was a bad bear market, took us from 1509 to 666. One well-known guru kept coming on CNBC saying, buy, buy, buy. Well, eventually the guru was right, but if all you do is say buy all the time, I can teach a parrot to give the same advice. I personally have learned more from other traders than I have from reading a book. One thing that really works for me is don't rely on any one system. Someone does only Elliott wave, or only cycles, or only this, or only that. I don't find it as good as taking a lot of information from a lot of people and combining it. That's why I don't just use one approach in the videos I make. These books, I'm probably leaving some out, but they have something to say. The Elliott wave principle is a classic, Frost and Prechter. It's a good book. It tells you what you need to know. The catch is it's a very subjective system. It frankly took me a long time to use Elliott wave. Had a lot of trouble until I finally got it to click. I look at other people's counts. They're all different. It doesn't help. And a lot of the very famous counts are just plain wrong. As I've said many times, the rally from 2016 to 2018 is a three-wave structure, and almost everyone else I see is counting it as a 5 in the end of wave 3, and that's just not right. This is a good book. The Delta system, some of the early highs and early lows come from that system. I have to tell you that while the idea is a good idea, the book itself leaves a lot of stuff out. It doesn't really give you the change in trend times, and I will guarantee you if all you use are the change in trend times, you will lose money. The system really tells you when the time moves you are going to make anyway. It's very tempting when you see a time the system predicts to act, but I would only act if you were going to act in the same direction anyway. I personally find it more helpful to know that the whole change in trend time pattern repeats every 32 calendar days. Spiral Calendar is a great book by Christopher Carolan. It's really a great piece of scholarship. It tells you the dates way ahead of time when you can anticipate major changes in trend. And the only problem with it is if there is a major change in trend, it's a date predicted by the system, but the system also predicts a lot of dates which are of no importance. It gets you to eliminate a lot of candidates for tops and for highs and lows, but you can't just use this alone. You have to use multiple things. And many forms of standard analysis, such as MEJT and RSE, you don't have to buy a book. If you want to, you can just go online, look them up. The point I want to make here is you have to look at what a lot of other people are saying and go through a lot of garbage to find something that means anything. And there's a famous story about a pile of horse manure, and that's what a lot of advisory services are, I think, and books are. But rather than ignore them all, remember the story of the little girl who found this big pile of horse manure and kept digging and digging and digging through it, and people asked why she'd go through all that stuff. And she said, with all this manure, all this horse manure, there has to be a pony in there someplace. And that's the point I want to make. If you listen to a lot of other people, not just me, not just one guru or some other guru, if you read a lot of stuff, eventually, in all that manure, you will find a pony. So, Monday's pattern's the one with the early low. It doesn't have to have a late high and a rally, but it usually does. If we keep dropping here, I don't see how we recover, but this is a very high likelihood of, I won't say high, there is a likelihood of gapping up and having one more run at the highs before we have the big drop I'm expecting. We should know by early Monday, and that's today's call.